Hey everybody, welcome to the monthly market update with the Briar Group. My name is Jane Johnston and I'm here with...
Sean Provencher. Thanks for joining us.
Thanks for hosting us, Sean. We're going to talk about the market update. We're going to talk about vacancy rate. We're going to talk about the war in the Middle East. What's your prediction for this year?
Shaky. Shaky. I thought this was going to be the year that we kind of picked back up a little bit. And boy, is there ever just a lot of insecurity right now as to what's coming down the pipeline. So I think it'll be slower than we'd expected it to be.
I'm in agreement with that. I think that things looked pretty steady, but now I feel that what's happening in the Middle East is kind of shaking things up for sure, especially as it relates to inflation. I felt like things were settling down. I think that is the major factor right now. Since the war in the Middle East will probably affect oil prices or are affecting oil prices, the cost of living is going to go up, inflation is going to go up, and then we're going to see bond rates go up, and then we're going to see fixed rates go up. Thoughts?
You know, this is outside of my scope of expertise, but generally that's what one would expect. I hope that the Bank of Canada is just going to be somewhat soft-handed in the way that they do all of this, because raising costs for Canadians right now sounds like throwing gasoline on the fire for the experience of like the average human. So they likely will need to do something. I don't know what they will do, but it's hopefully going to be something that they do in a way that keeps the consumer in mind, because a lot of people are just coming out of a couple really tough years and hoping that, you know, we can get back to some kind of normalcy, people start saving money again, that kind of thing.
Yeah, I agree. And I think, though, a good strategy if you're thinking about buying is to lock in now, or at least talk to a lender right now and get a locked in rate for the next 3 months so that you know what your rate is going to be if you're going to purchase, especially with a fixed term rate. If you're going variable, I don't know what's going to happen. So, and I know a lot of people, you and me included, have just renewed their mortgages. So, you know, are people going to lock in? I don't know.
Yeah, it'll be really interesting to see how that goes. Okay, so let's talk about what we actually saw in the market in the last month. Sales are really slow at the moment.
They are really slow. I feel there's a pent up demand. People are waiting. And what I'm seeing is I have a number of buyers ready to go and they're waiting for offers on their property, and I'm telling them don't write offers subject to sale right now, because I feel that you're going to be stressed out if your place doesn't sell. You're going to be more likely to take a lower number on your home. Best to get the number set with an accepted offer and then go shopping.
Yeah. This is one of those interesting things that can kind of clamor up the market too, where it's not really going to help our inventory problem, where we've had a lot of inventory over the past 12 plus months. If a lot of people who are placing their homes on the market are also not absorbing the inventory on the market because they're waiting to see, it's a bit of a chicken and egg situation.
I think that what's going to happen though is you're going to see, so it's like dominoes, we're all ready to go. And we have the cash buyer here. And as soon as the first cash buyer goes, it's going to flip. And then it'll be a fast weekend.
Yeah, and I could also see that happening. You know, we don't know how long this whole thing's going to last. We don't know how messy it's going to get. Take that out of mind for a moment and just say, okay, well, where are we at in the spring market? Well, we're still in the first half of March, right? And this is always the time of year where we're like, man, I'm surprised things aren't moving a little bit faster, because as realtors, we have all these people that are starting to enter the marketplace, and a lot of them are either, like you said, they're waiting on offers to come on their place. A lot of them are also waiting for inventory. I've been waiting with buyers for a while now, and although there's a lot on the market, a lot of it hasn't been great. A lot of it has been the ugly ducklings from last year's fall market that didn't sell and stuff like that. So I also could see a world where a month from now, the sales numbers at the very least have picked up quite a bit, and that could just be a reflection of like exactly what you were said, but also on the other side of the coin, just people who are like, yeah, now I'm ready, I'm going to pick it up, or that right house came up, so I'm now, you know, I've purchased, and that means I'm going to get my condo on the market, or whatever the order is, right?
Yes, and so I mean, it just goes to say right now that if you have cash, cash is going to be king for anybody in real estate at the moment. So you're probably likely to get a little money off if you don't have to offer subject to sale. On the selling end, you might have to be a little bit more flexible in terms of what you're accepting, just because we are having longer days on market. So, and buyers are being patient. I think you were saying, you were quoting the stats earlier, and it was saying that we're fairly slow, and we're up over last month, but when we compare to last year, we had a good January last year, we had a fairly steady February, and then things really stalled because of the change in government in the US. And I feel we're kind of on par with where we are normally in the market
That
anyway.
that's a really important note to say because we always focus on year over year sales, but I got the stats right here. And last year we had a good spring. This is like good, post COVID, interest rates are now higher kind of spring. But if we take last year out of the mix, January and February are within 10 sales of each other for 2026 and 2024. And same for 2023. In fact, we're doing better for both January and February in 2026 than we were in 2023. So, it feels like it's slow compared with last year. We were all hoping that the market would get really busy because it's been a slow 3 or 4 years with interest rates and all that stuff. But realistically, like, this is actually a pretty healthy market. We're just always looking back on it with, the craziness of the past decade in mind. So I also think it's important to say, like, we are slower than we could be. We're a little bit slower than we were last year. This is not a doomsday situation in Victoria. Um, Really, things are still moving along. It's just not really coming to life as quickly as we hoped it would.
Right. So I'm just looking here. Median house price is 1.2, which is excellent in Greater Victoria. And for condos, we're at 553, and at row townhouses, we're at 799. So we are still looking very robust and relatively, well, actually, single family homes are actually up a little bit at 3.4% over last month and 4.8% over last year. So single family homes are doing well, and the rest are basically staying pretty even price wise.
Okay,
What are you finding with HPI?
I want to talk about all of this stuff for a couple minutes because we've got three numbers that we often talk about in real estate. We have the HPI, which I'll come back to. We have the median price, and we have the average price. Median, easiest way to think about it is it literally means it's in the middle. So if you had 9 sales in a month, the median would be the fifth one. There's 4 below it, there's 4 above it, right? This is a really good representation of what the average home that sold was. Average price is if you add up all the sales and then divide by the number of sales, that would be the average number that was paid. It's almost always going to be higher than the median number by a good margin because luxury properties tend to drag it up more than really cheap properties exist to pull it down. And we've had a really good run this year for average price. Average price in February was 1.377. That's huge. So to me, I look at that and I'm like, I know that doesn't represent the average home, but it's nice to see that properties like the median property at 1.2, really respectable. That's a good price. And then to see that the average is that much higher shows that people are still buying expensive properties, which is a real sign for market health.
I just want to say though, the price that number that you're looking at is also the average all over Greater Victoria.
Correct. Yep.
So that's including Malahat and the islands. So this is an extensive range of property. So just so people understand that. Yeah.
Yep. Thanks for pointing that out. Yeah, if you read through the report, you'll find probably a couple dozen average prices. So you got to make sure you're talking about apples and apples. Okay, I want to go back for a minute though, because I had a laugh at this. I spent like an hour and a half researching that third number, HPI.
Yes.
Because the average price is up over last month. It's up over last year. Like the average price is performing really well. And I'm like, okay, well, why is average price up a significant amount? Median price performing well as well, it's up, and yet the HPI is down. Okay, so I actually I called the real estate board and I asked, I was like, how do you calculate HPI? Like, what goes into this? And he basically said, oh, well, we have a bunch of really smart people that use a bunch of really smart calculations and they create this number for you. If you want more information than that, I've got a book I can send you. I got a 23-page book and I read it, Jane. I read the whole thing. It's insane. So the HPI, the whole concept, okay, they wanted to take the bumps out of the market, which is one thing that you talk about average and median price. They do this a lot. So it can seem a lot more volatile than the market really is. So what they wanted to do is they wanted to get an idea of what an average consumer home in every area would cost. So back in 2005, I'm doing story time. I'm just taking over here. Back
That's
in
okay.
2005, they created what they call a benchmark home. They went and made all these different areas on the map, and they said, this is what an average home is like in this area. And then they waited for the same home to sell multiple times over a period of years on MLS. And based on how much each home that they saw, the same address selling over and over again, went up, that's how they figured out what the HPI is. Make sense so far?
Yes, it's supposed to track sort of true movement in the economy. It's not based on its trends, really.
Totally. It gets worse. They only had so many addresses that came up again and again and again. So they're like, well, we need more data. So what our HPI, the way that they calculate this, and I'm not saying it's bad, I think it's actually useful, but just so people know how removed this number is from the actual market, the HPI, what they do is they take that, ideological home they've created for every neighborhood, and they disassemble it into all the different components that are an attribute of the home. How it's heated, the square footage, anything they can find on the MLS, number of bedrooms, bathrooms, the lot size. They put it on a geo mapping software and see how far it is from amenities like rec centers and stuff like that. And then they figure out how much each of those things is worth, and they do like a multiplier using magic to figure out what they think the HPI did last month. Can I read you some of the words I found in that report?
Yes. Hold on, can I take a nap?
I'll just give you my favorites. Okay, ready? Hedonic price regression,
Oh,
multivariative regression analysis. This is all stuff that they do every month. I'm going to read you a couple more. Spatial autocorrelation, stepwise regression procedure, and my personal favorite, heteroskedasticity. That's how they make the HPI. Like, those are the ingredients in the soup. I'll sign off now. But, like, take it with a grain of salt. I think it's a really good measurement for what...
the trend.
Yeah, it's like, read it. I like to think of it, it's like your conservative dad. It's, if you ask your dad and your friend who's a realtor in the market, your dad's always going to be like, oh, be careful, don't move too slow, don't pay too much. It's not a very good average pulse, and it's all that they talk about. And people paid more by median price and by average price last month. So prices, to me, haven't really gone down, but the HPI says they have.
So I'm just looking at the HPI for Greater Victoria. It's 1,150,000. So it's down 1.3% for Greater Victoria. And in the core, it's down 0.9%. So what that's saying overall is we're fairly steady in the market. When I look at the average price, yes, that's affected by more higher end homes. And you're right, there aren't a lot of lower end homes in Victoria. That's why the average is high. I would say one thing that's changed over the past few years is we have a bigger range of homes. So during COVID, during 2022, I know there were no homes less than 950 because I had a listing and we were trying to price it to sell, and it was like a little teeny home, and we had, that was where we went with that. So I think, relatively speaking, we've done well in a volatile market year over year. For the past few years, we have done very well. We have not seen the kind of exhale that the Vancouver or Toronto market have done. We've been more steady. Wouldn't
We
you
hold
agree?
our value really well. We really do. It's way less volatile. Also, in the report last month, they said that we moved more cleanly into a balanced market. So we were right on the edge of becoming a very clear buyer's market with the way that the numbers landed in January. We moved back more in the middle, balanced, which is nice. Um, I
And
think
I
if
think
I,
that's related to single family homes too.
yep,
I think where we're seeing a weakness in the market, if I were to judge one portion of the market, I think it would be in condos. So let me actually just check what the HPI says for condos.
it
So
was
it is,
similar. It
yeah.
was like within a point of where it was.
Oh, yes. However, what's happened though is we've had a number of condo buildings complete that were purchased in 2022. So the average price went up in condos, and that has
That's
affected.
fascinating. Okay. So that's new construction.
Yeah. So,
Now, this will be fascinating though, because the other thing that happens when newer buildings complete that were purchased years ago is like a lot of these people who purchased in 3 years ago thought a one bedroom would be perfect for their current life. And over the course of 3 plus, almost 4 years, life has changed. We see usually a lot of turnover in new buildings, and that will be something that we'll watch for in the next 6 months for these buildings.
actually, what's interesting too is when I talked to the realtor for the developer, he told me I think there were about 15 people who defaulted on their purchase, so they just gave up their deposit and didn't proceed. So that would have been 10% of their purchase price. So that's interesting too. So there's some people who didn't have confidence in, or maybe perhaps because their financial situation changed in the 3.5 years.
Yeah.
So
If they sign that agreement in the beginning of 2002, interest
22.
rates are, yeah, sorry, 2022. I mean, interest rates have come back down a bit, but they're still a lot higher than what people were getting quoted at back then. So that could also be a factor. It could be, some of them are lacking confidence. It could also just be that some people didn't have the means anymore.
Yeah, or they moved out of the city and whatever, they didn't want to take care of a rental. Yeah.
Yeah.
So where do you think the market's going, Sean?
Oh boy. It's a really tricky one. Honestly, the truth is it's so hard to say. I do think that we will fumble forward as long as things don't escalate and get a lot worse closer to home. I think we'll probably continue along, probably at a pace that's similar to the 2023, 2024 market, more than 2025 plus, which is what we were hoping for. Um, you know, at the beginning of the year, I staked my claim that I said that I thought we'd see the HPI go up somewhere between 2 and 4%, and average price go up between 4 and 6. I still think that there's an okay chance of that happening, but if this drags out for a while, probably not. I might lose out on that one. What do you think?
I think it's going to remain steady. I don't think it's going to go up. And I think I'm hoping that we see a little surge in activity right now for people to get in the market before things change
Yeah.
overall. I also think that we're going to see a change in the way that people heat their houses. I think we're going to be moving more from gas to heat pump. And I think we're going to see the installation of things like solar panels, so that maybe like the way people change the way they spend money in their homes.
That's interesting. I hadn't thought about that. That's a really good point.
Yeah.
Um, I do agree that I think it would be wise for people to pick up and lock in a good rate right now. Like if you've been looking at buying, I think now's the time to get your money on the shelf in essence. I still don't think prices will go down again unless conflict gets a lot closer to home. I think we've seen the worst of that. And the other thing is it's not that bad of a time to sell your home. In fact, it's a pretty okay time to sell your home. You just can't do anything funny. Like price it on the attractive side of the scale, and you'll get action. We're still seeing multiple offers popping up everywhere. It's not the fireworks it used to be, but we had a property that we were going to offer on last week that ended up with 18 offers on it. 18. So, like, buyers are still out there, they're still active, and properties are moving quickly when the seller positions them really well within the marketplace.
Okay, but that property, what was the sale price? What was it? Did it go over asking or?
It was artificially low in the first place, so they priced it at 900. I thought it should have gone for a million one plus, or sorry, for a million plus. Pardon me, and it went for 975. There were some issues that came up, is what I think happened, because it did have a conditional period and it was pretty rough inside. So I think it sold right around market value. It's I will say, generally speaking, multiple offers is something that you really need. Like, you need to have the trifecta going on in order for it to work. You need to have the right price, the right house, the right market for it. Like, everything needs to be working. I think they took a bit of a risk. I think they got it done really quickly. It was a property that would have taken a while to sell otherwise, so maybe not the worst choice, but generally you got to be a bit of a gambler to do that in this market.
Yeah, true. And you're right about the multiple offers. They are happening right now. They're surprising, some at the higher end they're happening, which is interesting to me. So, which says to me that the people who have money still have money and they're still purchasing homes.
That's that average price thing. That's why I think it's important to watch that, because even if it doesn't completely accurately reflect what is going to happen to you this month, if you're buying an average home, what the average price does compared with the median shows you what part of the market's moving. And if someone's the type of person that's putting $2 or $3 million into any market, well, chances are they've had some experience that brought them there. So it's always smart to take note of what their moves are.
Yeah, and if you want more information on that, you guys, we do have a graph that shows price range and then area, and you can see where things are selling. So you can see, like, for instance, I'm just looking at it right here, that, Langford has homes up in the 800 range. There's a lot of homes selling in there. Whereas if we go to Saanich East, we're seeing less housing selling, but we're selling it at a higher price range. So these are where, the stats come in when we get granular and we look at what's happening in your neighborhood. I think it's fairly important.
Couldn't agree more. Yeah, this is all generalities, but your case will always differ, especially in a market that's kind of like so segmented like we're in right now.
Yeah. Alrighty. So, if people want more information, Sean, how do they get in touch with you?
You know what? Come find us on the internet. You can find me at sean.p.victoria on any social media, or shoot me a text, 250-589-4166. How about you, Jane?
I like texts, 250-744-0775, and I'm doing a series on my Instagram. If you want some microdoses of information, at realtyteacher_remax_Victoria. I'm also on YouTube at Jane Johnston Briar Hill Group, or Jane Johnston Realtor. Alrighty.
Thanks for watching, everyone.
All right. See you next month. Bye.